You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Mark Longo here from the Options Insider, and I'm breaking into your regularly scheduled program to let you know about a group and an event that I think may interest a lot of you. I know a lot of our readers and our listeners out there are interested in using and applying their options and risk management expertise in a lot of interesting new areas. And maybe you want to become a fund manager or an asset manager. Maybe you want to create a financial technology startup or become an educator. There's a lot of interesting ways you can apply that expertise. And if that sounds like you, well, then I have a group you may be interested in joining. It's called the Options Alliance. We're a group of active financial entrepreneurs and startups. We have a conference every year that explores all of the issues that are important to new startups and new endeavors in this space, including how to market your new venture, how to grow your AUM. Of course, it's a very important metric if you are an asset manager, and perhaps most importantly, how to fund all of those great new endeavors. It's a really unique event. There's nothing else like it out there. So if that sounds like something that might interest you, then clear your calendar for Monday, December 8th, and join us at the Arditi Center for Risk Management right here in Chicago. You can review the full agenda and reserve your seat at www.optionsalliance.org. And now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of what's trading, a little bit of unusual activity, a little bit of strategery, and of course, some listener feedback, some listener questions. Swirl it all together in a super high-end megawatt blender, and you get the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. 13 programs for you guys to choose from on said network, including nearly 400 archived episodes of the Option Block. A lot of pearls of wisdom located in those. I encourage you, listeners, you got some free time, you're cruising around, you got a commute or a plane ride coming up, dive into those archives. There's some nuggets in there. We're going to try to surface some of those, make them a little easier for you, too. But as you can imagine, nearly 400 hours of content, a lot of sorting, a lot of sifting to do. But check it out. You can find them, of course, at theoptionsinsider.com. It's the easiest place to find pretty much all of our content. Of course, you can find it in all major audio outlets as well. iTunes, Stitcher, Aha Mobile, wherever you go for your audio content. If you go somewhere and we're not there, let us know. We'll be sure to set it up for you. Of course, you can find us the old-fashioned way via RSS feed. Just plug it in to whatever device or podcatcher you like to use, or you can use it the old easy way, actually, with the one we've built for you, which is, of course, the mobile app available for iOS, Android, and the Fire OS. No shortage of ways for you guys to get a hold of this fine content we produce for you guys absolutely for free. All right, and joining me on the old program today, the man representing the firm who makes all this free stuff possible for you guys, at least on this program. He is, of course, Alex Jacobson, the major domo of education over there at Options Express by Charles Schwab, a.k.a. the Viceroy. Mr. Viceroy, welcome back to the program, sir.
Good to be back, and real interesting day today. I don't think the averages are really telling the story of the carnage that went on today, but we'll talk about that today.
Yeah, some interesting stuff afoot out there for a first day back from a holiday weekend. You never know how these ones are going to go. Could be a little bit wonky, a little bit crazy, a little bit wild, or a little bit quiet. And we got in the former category as opposed to the latter today, which is, of course, always a nice thing. Have a little bit of something to talk about on the old show. Speaking of stuff to talk about, we need people to talk about those things with. So we are joined also by Uncle Mike Tosaw from RCM Wealth Advisors, a man who I'm sure had quite the BBI today. Uncle Mike, welcome back to the program, sir.
Absolutely. Happy to be here, and plenty to talk about is correct.
All right. And last but not least, rounding out the old panel, you know him, you love him, or perhaps loathe him as the Rock Lobster. He is none other than Mr. Andrew Giovinazzi from Option Pit, by way of some dalliances over here on the Options Insider as well. Mr. G, welcome back to the program, sir.
I don't know if I was loath. I was loath probably as a market maker.
Yeah, I was going to say, I don't know of anyone that would loathe them.
Everyone
as
was
a market maker. For sure there was some loathing going.
Wasn't everyone pretty much loathed on the floor? Wasn't that the most common saying? You know, off the floor, he's a really great guy.
But he's really kind of a you know what. Yeah. So that's that. I could see that. Oh, by the way, oil's $70, baby. 66 or 64.
Yeah, it's bloodbath Opalooza. So much for the OPEC 70 put or the 70 defense or whatever you want to call it.
That was a huge target.
Yeah, and a lot to talk about. So without further ado, let's dive right into it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, as Mr. Andrew alluded to, a lot of stuff cooking, as well as Mr. Alex and Mr. Uncle Mike. A lot of stuff really cooking today. We'll start off in the broad index camp, then we could dive into commodities or wherever the whim takes us. The Q's taking it on the chin today. The tech really taking the lion's share of the pounding, down off over 1% today. 1.25 handles in the Q's there. S&P kind of the middle of the road, down about 0.75 of a percentage point, and the Dow only off slightly, only off about 0.25 of a percentage point or so. We are recording this, again, listeners, on Monday, December 1st, for all of you playing the home game. And of course, as Andrew alluded to as well, it was a crazy day on a bunch of different fronts. On the commodity front, oil really cratering. We've all been kind of scratching our heads on our futures options roundtable about what the hell is going on out there in crude land. A lot of us saying back when crude hit the low 80s, around the 80 handle, that seemed like the lion's share of the bearish sentiment had been spent. The bearish move had been spent. A lot of that steep premium they were building into the skew out there in oil options, and the steep premium they were giving to the puts may have been unwarranted given just how much ferocity we saw moving from the 90-odd handle all the way down to the 80-odd handle. And lo and behold, they make liars of us all as crude gapped under 64 today, which is just madness. Then it finally popped about 4.3% again to settle right just a hair under $70 a barrel, $69 a barrel to be precise. So this is just crazy town, no matter where you're talking. Of course, stuff going on in Apple land as well, everywhere. I'm not sure where to begin, so perhaps we'll just roll the dice. I'll spin the wheel here. It landed on Uncle Mike. So I think we'll start with Uncle Mike. And of course, I have a feeling I know where you're going to start, Uncle Mike. This is, of course, in Apple land. We saw some people talking about what they were calling, as the hyperbolic media wants to call it, the mini Apple crash. Stock was off almost 6.5% at the open there, got down to about 111 in the morning. Actually, in the first 30 minutes of the day, it was off about 6.5%. In that time frame, actually up to about 1:30 p.m., it had already done about 60 million shares, which is well over an average day's volume of stock. The average day is about 49 million shares, doing 60 million just by 1:30 p.m. So clearly a robust day. Robust day from the options as well, doing about 1.2 million contracts when it's been averaging about less than 1.1. So only a little bit over the ADV from an options perspective, but well over from an equity underlying perspective. So I'm sure you had a lot to watch today. Uncle Mike, tell us what caught your eye in today's activity.
Well, of course, Apple did. And looking at it, I'm just brought up a daily chart today at probably about maybe 20 minutes into the market is when Apple had its big crash, so to speak. And it recovered fairly quickly from the lows anyway. We are still down $3, closed at $115.05 today. And it was kind of one of those things to where I had an order in to take profits. One of the near-term hedges that I have in place on Apple right now is I'm long the DC Week 4 115 puts and short the DC Week 2 115 puts. And I had an order in to take profits. It didn't fill all day today. So in terms of how my day was spent, it was kind of one of those things to where I'm just watching it and it never filled. So I'm still in the same positions at the end of the day today as I was at the beginning of the day. With this, I'm not going to say that I wasn't surprised by this because, when you see a price bar this steep with Apple going down from in a 3-minute span, basically from 118 all the way down to 111, that's something that is quite surprising. But where I'm going with this is that a little bit of a pullback in Apple might not necessarily be a bad thing. To have it as quickly as we did and kind of have that ginormous price bar with which we had this morning, it's not the easiest thing to stomach for a lot of people, but let's look at the reality of it. I'm looking at a chart right now. If you look at Apple in mid-October, we're at 95, and it went from 95 to 119 over the course of a little over a month. And stocks that have big rallies are going to have big pullbacks. And so with something like today, it's kind of one of those situations to where, like I said, you don't like to see a big downward price bar like that, but we've had quite the run in Apple over the course of the last month and a half.
Yeah, you're right. I'm just looking here at some different speculations as to why Apple was taking it on the chin this morning. I'm kind of not a big fan of postulating on these things because it could be a myriad of reasons. At the end of the day, more sellers than buyers is the ultimate trump card. But it seems like, at least from cursory glances, that why would you hit the bid the morning after the first session after Black Friday? Well, it sounds like people maybe aren't too overly enlightened or overly enthused by the sales out there. I will have to say, in my cursory anecdotal experience, I do like to kind of swing around to some of the stores when I have a chance on that Black Friday weekend, just kind of get a sense of the maelstrom that is going on out there. I don't really fight for sales or anything. I kind of more just go to check it all out. And I was walking through some stores on even Thanksgiving Day when the hordes were supposed to be starting at 5:30 at some of these stores like Best Buy, where the legendary stampedes have occurred. And there was nothing. You could walk up and buy pretty much as many iPads, quote unquote, doorbusters as you wanted at a lot of these stores. And there were no lines to check out. So perhaps that's also feeding in to the stock today as well. And since Uncle Mike tossed it to you, Alex, let's dive into the macro trends as well as what you were watching was catching your eye over there at OX today.
So it was really, really busy here at OX today. In fact, the trading desk is on 10. I'm up on 11, and we had a series of meetings today. And John Grigas, who runs our trading desk, walked past me at one point today, and I said to him, what's going on? He said, God, incredibly busy. And I said, what is it? And he said, it's everything. And I said, okay, slow down, John. Tell me what everything means. And so clearly the energy complex today, Friday's wasn't a mini crash in energy. It was a crash in energy where you lost almost 10% in energy. Now, the market came back today, as Andrew pointed out. Crude was up $3, and the big integrated oils were up, and the drillers came back a bit. But in terms of the paper and energy, the paper here was a lot of bottom fishing in the last couple of weeks, and they got run over in Friday's move with OPEC standing pat, which I think nobody expected. But in the stock market today, there was a bit of, they seemed to take down everything momentum related, and it started, as Mike pointed out, little Apple news this morning, and then it wasn't clear what the Apple news was this morning, and then the Black Friday numbers came out. Then Amazon got downgraded, and Grigas said at one point he had people trading Apple on the Amazon news. And it was like, well, that it kind of doesn't make sense. But they tended to kill everything momentum. The Chinese twins, Alibaba and Baidu, got hit today. It just seemed that there was profit taking in anything momentum related. And that really seemed to be the tone of the day. I don't know if it's loss selling and profit taking to maybe match some stuff up, but today it was just kind of quiet carnage in everything that had been up going into the last few weeks.
Yeah, I'm looking here, of course, Amazon was downgraded by Moody's today, so not a small house, cutting them on news that they're issuing new debt. Amazon taking it on the chin, as you might imagine, today, off nearly 4%, or nearly 13 handles, close right about 326 on the day today. So that's kind of interesting in and of itself. Seen some people also speculating that, hey, maybe Apple tends to get a little top heavy whenever it gets up to around an 18 PE. Of course, you say things like that, then you talk about Amazon in the same sentence, and it just puts all those types of conversations in a little bit of perspective. Apple having obviously a little bit of wiggle room to the north when it comes to PE, certainly when compared to Amazon. Mr. Rock Lobster, take us home. I'm guessing from your comments earlier that oil was top of mind for you guys over there at the pit today.
Yeah, we had things that we unwound in oil today and Friday. And it did turn out, an OPEC, you don't get kind of a heads up very often from those big, let's just call them those big quasi-governmental bodies. Well, we're going to defend it at 70, or we're thinking about it at 70. And then, they have the meeting. We're not doing anything. So, supply demand problem, and there's too much oil right now. I'm sure at some point there won't be, but right now there is, and the price can go a long way. So at least, at this level, who knows if things start to kind of right the ship. But it did bounce. It feels like the volatility and all the drill. We were trying to find positions that made some sense, but it was hard in the drillers. Unless you kind of want to sell puts to take advantage of the fall. But, there's still, I would not say there's a huge bid for that sector yet. So, the market moved down a little bit. It was like, 0.75%. That's like a 12. Vol was priced pretty well, but there was a bid for volatility futures pretty much all day. And it never went away. They're selling off a little bit into the close, but for the most part, there was a pretty solid bid for volatility. It started midday Friday, or toward the end of midday, or toward the end of the session, and it's picked up right along through here. We had almost a two-handle move in, let's say, in VXX, and those futures went from like 13 to 15, or like high 14. So there is a bid for volatility futures. Now, I don't know if it's kind of the puts in stock bid where I'm going to buy VIX futures, and I'm going to buy the underlying and see where it all goes. It felt like a little more of that, and with some bargain hunting today. But for the most part, we've got expensive volatility once again. We have markets at near all-time highs, and I don't think the market stocks have figured out yet what to do with new cheaper oil. I don't think that's really. Besides in airlines and in some retailers, I don't think it's really manifested itself yet, at least the cost savings and things like that it'll bring.
Yeah, if your mentees and clients and listeners are looking for a perhaps position for a pop in oil out there, I'm just looking at the crude skew while you were talking, and of course puts still extremely juicy, as you might imagine. Certainly warranted given all the price activity of late, but the calls still haven't really seemed to catch much of a bid. So if you're one of those people out there who is feeling that there is perhaps a turnaround in the works, that this sell-off is overdone, I'm not saying I subscribe to that. I'm just saying if you do, then there might be some opportunities to the upside, verticals or things like that, where you can get in for levels that still aren't really reflecting any sort of concern about an upside movement. So you're apparently the lone voice in the wilderness on that front, at least looking from an overall option skew perspective, but still interesting. You'd think at a certain point we start seeing a bit of a bid in these calls. Certainly today's activity, 4% rally towards the end of the day, shows that there is some upside potential here, and yet we're not really seeing that reflected in the options yet, which is somewhat interesting in and of itself. Moving on to some broader options topics here. It is the first, which means it's that time of month, listeners, when we look back on the month that was from an overall options volume perspective. And from a month perspective, it wasn't the best month ever, but overall the year actually looking pretty good, which is kind of interesting. Datus announced the OCC, our friends over there, the Options Clearing Corp, who clear all those fun contracts you trade on a daily basis, that their overall volume in November was down about 6%. They said they cleared about 294 million contracts. That's down about 6.25% from last November's 314 million contracts. But year to date, this is what's interesting. The volume is about 3.9 billion. That's billion with a B contracts, listeners, up about 3.2% compared to the 3.8 billion roughly this time last year. So despite some seriously weak periods this year, the early surge in the first quarter where we saw some volume coming out of the Ukraine volatility, and then of course the spike again we saw in October in that region, all of that seems to have combined to set us on par, on a course for looks like could be another record year. If these numbers hold up through the final month of the year, 2014 is going to be on record to be the second highest volume year ever from a listed options perspective. ADV for November, about 15.5 million contracts a day. It's down about 1.3% from last year's 15.7 million. Drilling down a little bit further into the equity options, year-to-date equity options is up about 2.65% to 3.52 billion contracts. Total volume last month for equity options came in at about 270 million contracts, 6.23% less than last November. ADV for equity options at about 14 million contracts. That's off about 1.3% from last year. So despite some concerning months this year, overall the trend is looking strong. So that'll be interesting to watch as we go on into the final month of the year. Speaking of moving on to things, it's time to keep on moving right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block, the portion of the show where we break down the weird, the wild, the woolly, the sometimes downright wondrous activity we're seeing going up out there in the old options market. Surprise, surprise, going to kick things off today with a little bit of action in oil, in particular Marathon Oil Corp, ticker symbol MRO. This one closing today a penny south of $29, pretty much unched on the day, which is interesting given the activity we saw throughout most of the day. It gapped down to about 28 and a quarter today, so it had a bit of a range, but closed like crude, somewhat up on the day, or just about unched on the day. So getting a little bit of a bounce, just like crude did towards the latter half of the session as well. This is the name that does just about 6,000 contracts a day, doing about 3x that, about 18, nearly 19,000 contracts today. And what caught our eye out here, have to pull up the Dece and the Jan expirations to get it all right. And we got some weeklies thrown in there, so that, of course, makes things extra fun, listeners. In particular, it was the December, so straight up December, 31 puts going up 2,000 times at first caught our eye, and that was paired with the January. Let me pull up those as well. The January 27 puts going up 4,000 times, net for $2.82 for 4,000 of the Jan puts by 2,000 of the Dece puts. Looks like it went up in two blocks. As you might expect with a print going up this large in this name, it was out of sequence, of course, surprise, surprise. Looks like closing the Dece puts and then reopening for 2x the size out there in Jan. Again, another one of these house money rolls. We profiled a few of these in the past, so interesting to watch this one. There is some size already open on this Jan strike to the tune of about 3,000 contracts. So looks like this could be adding on paper here to this strike, or this guy, like I said, just house rolling and saying, hey, I still like it. I like it to the tune of 2x, but a little bit farther down on the old strike chain. Mr. Rock Lobster, kick us off here in the old Odd Block. What's your take on this 1x2 put roll here in Marathon.
All right. So, MRO is, it's getting beat with the ugly stick. It's still trading at its lows. And I think our savvy customer took their D31 puts, took their money for $2.82. I think probably made pretty good dough on them, considering MRO was trading 32.5 2 days ago. and rolling down to the 27s. Just in case, and buying more. So, they might think there's more to go in this little oil. Let's just call it the oil debacle so far of 2014.
Yeah, it certainly is shaping up to be a bit of a debacle, all things considered. OPEC, nobody can hold this price in oil out here. Kind of interesting to see. So we'll keep an eye on that one. Meanwhile, we're going to move on to one that is a little bit nearer term, maybe a little bit more to watch here in the coming weeks. This one we caught out here in Bristol-Myers Squibb, ticker symbol BMY, closing today pretty much exactly unched at 59 and a nickel on the day. And what caught our eye, well, before we even get to that, let's get to the numbers. This is the name that does about 16, merely almost 17,000 every day, doing about 26,000 contracts today. So fairly decent paper for good old BMY. You can look all over the place. Some paper, some weird paper. Dees Weekly 46 half puts going up today, 87 times. All kinds of weird paper. But what caught our eye the most sizable weirdness came in the weekly Dees 60 half calls. When we started profiling them this morning, it looked like about 255 of these calls were going up paper buy-in for 28 cents. As the day went up, we saw more scattered buying on the day to the tune of 2,609 of these contracts going up on the day. And that opening kind, that was that newsletter guy front-running his own paper. He may regret it because he bought these for 28 cents. They went out 11 cents at 12. So he's feeling the pain already today if these are indeed opening buys, as they appear to be. Again, another reason why we tell you guys out there with the newsletters, as this looks to be like a newsletter trade, watch out. Don't just follow in with the herd of lemmings, because if you followed in early in particular, you really got screwed. Usually it's the opposite. Usually you get in first, you get the better levels. This time, this one just getting crushed. We also saw some paper going up here in Jan as well, a little bit more size, to the tune of the Jan 57 half calls going up 8,000 times. Looks like paper buying those as well. So net on both strikes, whether they're related or not, it's kind of hard to believe that two sizable big plays like that would go up on a single day without being related. But whether they're related or not, some size upside, or in this case, in the money paper, going up here in BMY. Mr. Rock Lobster, what's your take on this? In particular, all those lemmings piling into the D60 halves, as well as what's going on up here in Jan.
It definitely was. It feels like there was that kind of rush to do nothing in the morning where, buyers, there's a little bit of a bid for the stock. Buyers come in, they're all excited, and then nothing. It all just went away. It went the way of the dodo. And, I think for a while, those 60 and a half calls looked real good. I mean, BMY was trading near 60 and a half.
Yeah, I neglected to mention it got up to there today. It had a bit of a range. And so I guess they had a moment.
It traded up there. I didn't see any closing paper at that level. So, but, I don't know if there's takeover. I mean, Bristol-Myers Squibb is probably much more of an acquirer than acquiree. Who knows? But maybe on a day when they were hitting all the, all the loved tech stocks, somebody tiptoed over to Bristol-Myers Squibb and picked up some calls. But, I thought it was pretty much, there's just a lot of opening call buying. And I wonder if they have a drug coming out or something like that here anytime soon. But it just definitely like buy paper. You know what I mean? So, and I didn't see closing on the that second trade that I mentioned there either, the Jan 57 and a halves. So it looked like opening paper. I'm opening and I'm going to buy them and I'm going to watch the stock go up. So that's what I see on that.
Because I'll have to dig into the time and sales. Could have been the case where he bought those 60 halves, stock took off, he was excited with himself, then he missed his opportunity to get out of them. Stock took a bit of a bath afterwards, and maybe he said, hey, I liked it before. I like it even more now at 58.5. I'm going to load up on these Jan calls as well, get them while they're getting as good here. So it could have been perhaps maybe he was a little bit savvier than we're giving him credit. Maybe he was well-timed. Like I said, we have to look at time and sales to see if and when he put these on and for what levels. But interesting paper. Clearly someone putting a lot of his money where his mouth is, saying BMY is heading north and sometime soon. So we'll put this one in the to be watched category. You should do so as well, listeners playing the home game, in case you're looking for some names that might have some ball, may have some activity in the near term. Perhaps BMY could be your choice du jour. All right, moving on to our final name, our final victim here in the old odd block today. This is Barnes & Noble, ticker symbol books, BKS. Closing today, $22.19, down $1.17, or down about 5%. This is the name that pretty much taking it on the chin today, no matter how you really cut it. Looking over this name, for some reason my quote screen is a little bit wonky for this one, so I'm going to have to skip the old volume rundown. Perhaps Andrew can do that for you. But instead, I'll let you know exactly what we saw going up today. It was an interesting, cheap upside spec here in good old books. Perhaps speculating that the sell-off we saw today was a bit overdone. We saw the Dees 23.25 call spread going up 1 by 2, 1,800 by 3,600, going up for 88 cents on the 23s, 31 cents on the 25s, obviously buying one, selling two. It went up in 2 blocks, netting out for about 24 cents. Someone obviously betting A, that today's sell-off a bit overdone. B, we have earnings coming up in this name as well, so perhaps specking on those as well. We talked about these a lot of times on the show in the past, the 1 by 2 being an interesting opportunity, an interesting way to get some upside specs on for cheap, as long as you have a very defined viewpoint on where you think the underlying is going. If you don't expect an exaggerated upside move anytime soon, 1 by 2 may not be a bad way for you to go. Mr. Rock Lobster, take us home. What's your take on this relatively sizable 1 by 2 out here in books?
Yeah, definitely not. Barnes & Noble, they was going to be taken over, then not. Didn't they have they don't have the Kindle. What do they have? The Nook?
They have the Nook. Yeah, I think Microsoft took that over, I believe, right? Or partnered with them or something along those lines.
They did something, right? So, they've had some earnings trouble and things like that. Is the stock going to go up? Is it going to go up $5? Because that's basically what it takes to make that call spread really hurt. 27 is basically break even. I mean, roughly speaking. So I found this it's found like a smart way to sort of play the retail bump that we might get. Small dollars, wait till the vol comes crashing in, and you could have a trade for 18 cents that could be worth $1.50. Or 3.5. Okay, let's go with vol. Probably worth $1 until that very last moment when the 25s evaporate somehow. So remember, you just don't get all the money right away. Once the stock goes to the strike, you have to wait and let the K finish the rest. But nonetheless, I don't think it was a bad play for Barnes & Noble, mostly because I think that its dreams of takeover seem over, at least for right now, as far as I can tell.
Yeah, the Nook was one of the few, at least potential bright spots they had on their horizon. When you're a bricks and mortar book retailer, there's not a lot of bright spots on the horizon, and that seemed to be one of them. And then, of course, the Nook came out, and I'm not sure if you ever had one. I was actually given one at a conference a few years ago, and it wasn't even that worthwhile as a free device, let alone as a something you would actually pay for. It was very, very limited in what it could do, and of course, you were limited to the Barnes & Noble ecosystem, where if you're choosing between Amazon and Barnes & Noble, why the hell would you go with Barnes & Noble? So there's a lot of ifs and questions going into that device, and it didn't work out as well for them, let alone the costs of maintaining that hardware upgrade cycle to keep it competitive with the Apples and the Amazons and the Androids of the world. It takes a lot of effort and expense that they clearly didn't have. But still, someone obviously thinking there's a little bit of near-term upside to be had out here in books. So we shall file this one under the to-be-watched category as well, as we keep on rolling with the show right on into the Xpress Block.
The Xpress Block. Brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, Mr. Viceroy, you alluded to it at the top of the show. A lot of stuff cooking, a lot of stuff kicking off over there at OX. Pretty much take your pick your sector, and probably with something cooking over there. So why don't you go ahead and give us our behind-the-scenes tour. What really caught your eye over there at OX today?
Well, I want to talk a little bit about energy today. And I know one of the questions that comes up when markets get really volatile like this, I think the SIBO Gold Volatility Index is up about 120% over the last 60 days. One of the questions that you get a lot from clients is, okay, I see all this stuff going on. I see commentary about skewing options. Not crazy about trading the stocks. What's the best way to trade here? And we've talked a lot on the show that the ETFs, the ETNs, the USOs are not a way to trade. This is the one product where even though there's some skew, you want to look at the futures options. And those are the NYMEX options. It's all CME today. But one thing to consider if you want to make a trade here, especially if you're coming at this from the short side. Yes, you can short stocks. You can go out and short Exxon, and you can short Conoco, or you can short Marathon. Talked about that in the odd block name. Keep it in mind, though, you're going to pay the dividend, and these things, I think most of them 1X in November. But probably the purest play here are the options on the light crude contract. And if you're an investor who wants to trade oil and get in there directly, think about getting a futures approved account. Think about getting an account where you can trade the oil options. You can trade them electronically. Now, let me put a little caveat up that not everything has great liquidity in it. And there are after-hours sessions and pre-opening sessions. And the liquidity in those tends to be best right around the front month and the kind of at the money. But take a look at them. They're not for everybody. If you're trading in a retirement account, futures options aren't a vehicle to consider. But if you think oil's going to 40, the Journal today was talking about what the world would be like with $40 oil. Or if you're someone who thinks oil is going to go back to that 100 mark, look at the futures options, look at spreads in the futures options. Man, if you're someone who thinks it's going to go down another $10, look at trading the 70, 60 put spread. But the pure play here is, or the purest play is in the futures options. Now, let me sort of finish the caveat here. Because you can't trade the cash in oil, and this is something that sort of comes up a lot, because you can't trade the cash in oil, you cannot do the cash and carry trade. And I know some of you are saying, yeah, but there are folks who can trade the cash. They're the Royal Dutches and the British Petroleums. Yeah, I agree. But most investors, even most institutional investors, aren't going to trade the cash. That means you're going to have to tolerate things like skew and some inversion, especially out in the back months. But I think if you want to participate in this oil market, 10% move on Friday, about a 5% move back up today. By the way, we saw that same move in gold and silver today, big moves back up. Those are markets where you might want to consider getting your account approved for futures options, limited risk, just like the options you're familiar with. Be aware of the hours they trade and when the expiration dates are, but look at the futures options markets. Those of us in the options industry are, I don't want to say shocked, but kind of surprised at how quickly the futures options business is growing. And this is one of the reasons for it. It's the best pure play in things like energy.
Thank you for that, Mr. Alex. A lot of people are probably surprised to hear OX beating the drum so hard for the energy alternatives and the options and the futures options out there. But you guys have been doing that for ages. You're one of the early movers in the futures option space. So surf on over to optionsexpress.com. Check it out in your account. If you're not registered for futures, click on a couple tabs there, fill out a few forms, takes a couple seconds. Now you have a futures enabled account too. You can check out all the cool stuff that they have going over there on the futures research side as well as the futures tools side. And of course, all the cool stuff Alex was just alluding to as well. And now it's time for us to keep on rolling right on into our next segment. It's Monday. That means it's time for some strategery. Yes, it's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, you know what that music means. It's Monday. It's time for Uncle Mike to come on down from the mountains or perhaps the slight molehills out there in St. Charles, Illinois, smoking jacket and stone tablets in hand, and perhaps a bubble pipe or two. You never know if the mood strikes him. Ready and willing to dispense some options, wit, and wisdom. Uncle Mike, I've been talking to my minions. A lot of them are off for the holiday because, of course, I'm not a slave driver here. I don't make my minions work through the holidays. And now they're back a little bit, still kind of dozy from turkey, but none the worse for weird. And I'm hearing some whispers in my ear from what I can make out from amongst all their jam and jelly eating that they are indeed hearing some whispers about some perhaps risk reversals and maybe a little bit funkier than your typical bullish or bearish, maybe adding a little bit of diagonal craziness to the mix. Now, let me know, have they warranted their jam and jelly bonus today, or are they completely off base?
I'd give them all the leftovers from your own home table. They're dead on yet again.
Wow, they're getting better. I'd say I was a rocky start for the purple minions, but now I'm starting to find a home for them, I think.
It's good all around. You can never have too many purple minions. That's what I always say. But I am their union spokesperson, so I have to say that. But
you do look like a large purple minion now that I think about it.
With that in mind, with oil doing what it's doing, I want to go through a strategy that I've done in years past, and I'm also in the I don't know camp with oil. If I had a gun to my head, I would probably be bullish on oil over being bearish. But thankfully, I don't have a gun in my head, so I don't have to put my money where my mouth is on this. But I do know that there probably are some people with the vast audience with which we have that are bullish on oil. And this is something that I've done in the past that I thought might pique someone's interest today for something that they may want to do. Now, full disclosure, I'm going to use ExxonMobil just because it's a random oil stock that comes to mind, and this might work with. It wouldn't be ideal. I would scan many more oil stocks. I'd also look at XLE. I'd also look at crude oil itself on the futures options like Alex is talking about before doing this strategy. But this is just something that I thought might be of interest for someone in this situation. Now, let's say that you are of the school of thought that you are bullish on oil. And this is to kind of add to what Mark was talking about a little bit earlier in the show in terms of selling some puts. What I like about a diagonal call spread is that you have potential upside. And when I'm referring to a diagonal call spread, I'm talking about buying a longer term in the money call option and selling a more near term out of the money call option. So you're basically trying to create a synthetic covered call in one way, shape, or form. Now, with that in mind, the bad part about doing such a trade is that you have limited upside. And if you want to be really bullish on something, then having limited upside really isn't a good fit. So the other concept that I like about doing something using the calendar is what kind of exists right now in oil. Now, what I did is I went to Exxon. Once again, I don't own Exxon. I have no feeling on Exxon. Exxon is just a random stock with which I picked that happened to be in the oil sector. I'm looking at the February 95 call. Now, the February 95 call right now, I'm showing it based on the close. It's bid ask is $1.83 by $1.89. So let's just assume an awful fill right now, and let's just buy that call option, the Feb 95 call, for $1.89. Now, with that in mind, and what I would recommend doing on this also is using the OX trade calculator. This is stuff that when I worked at Options Express, I used to use that tool all day, and this is something that I think would really make a lot of sense for kind of playing around and seeing how this would work. So that's step one. Now, with the call option, obviously, if oil goes up, or I'm sorry, if Exxon goes up, then this call should make money unless we have a major drop in volatility. But let's say Exxon goes up to the 100, 110 level. By gosh, man, you are a genius for buying this call option. However, let's say that it doesn't go up quite as fast, and you're kind of concerned with it. You're kind of concerned with just the time value going away from you. Well, one thing you can do is sell the December 91 put, the December week 2 91 put. And just as I'm looking at the quotes on it, based on today's close, it show it trading at 72 cents by 96 cents. So let's just say you get filled at 80 cents. So we're buying the February 95 call for $1.89, and we're selling the December 91 put for 80 cents. So with all that, this is a limit debit of little over $1. Now, here's what has to happen on this. Exxon has to go up. And if you don't think Exxon's going to go up, then this is not a good trade. But with that in mind, you might say, well, but Mike, why are you doing this risk reversal on Exxon? And why don't you just go out and buy maybe or sell, instead of selling this December week 2 91 put, why don't you just go out and sell, say, a February, and just kind of keep this simple and go February and February? Well, the reason with which I am not doing that is because of the fact that, let's say, and we don't number one, we don't have a February 91 put, but let's say that I did sell the February 90 put, for example. If I do that, I could actually do this trade for a limit credit. But because of the fact that I'm showing the February 90 put is at $2.34. But the problem with that is that I have to actually wait until February to complete my obligation of owning that put. Now, once again, I understand the fact that you can get out of a put at any time. There's no law that says you have to hold it till expiration. However, you have a longer obligation when selling a further out option. Now, let's look at the volatilities on this. Now, just real quick, in the view with which I have on my platform, the February 90 put, I'm showing a volatility of a little over 19%, and the DEES week 2 91 put, I'm showing a little over 21%. So you have a higher volatility in a more near-term option. And you could make the case that it's because of the fact that oil's done what it's done the last few days, and it's jacked up the near-term volatility with paranoia. That could be one explanation of it. But with that in mind, this is a way with which, by doing a diagonal risk reversal, it's something with which you can take advantage of in terms of, I hate to call it a volatility skew, but you're selling higher vol than what you're buying. Now, here's the other thing that you need to keep in mind when doing this with Exxon. Exxon actually pays a dividend. And let me see, I'm not sure how much it actually pays, but let me take a look real quick. I do know that it pays one. But nonetheless, okay, now my platform's not showing me the dividend, but nonetheless, Exxon does pay a dividend. And a lot of times on stocks, well, I shouldn't say a lot of times, almost every time on stocks, stocks that pay a significant dividend, calls are priced less than puts. Now, we've talked about synthetics and things like that on the show, and I don't want to get into that right now. What we're ultimately trying to do with this trade is, perhaps by early to mid-January, let's assume that Exxon stays the same, we're hoping to rinse, sell, and repeat, so to speak. We're hoping to sell the near-term options 2 or 3 times to finance the entire cost of that call option. And then come early to mid-January, you have a fully financed call option, and you can ride the upside. Now, with that in mind, let's say that Exxon just shoots up to high heaven right away, and by the end of December, Exxon's at $125 a share, and you didn't get to sell your second put. You missed out on that 70 cents, and you didn't get a fully financed call like you had hoped for. Well, keep in mind that whenever you go to a party and tell somebody about the trade with which you made and the fact that Exxon went up to $120 a share and you missed out on that 70 cents, I will guarantee you that no one's going to say, oh, you couldn't sell that second 70 cents on there? You are a flippin' idiot, my friend. No one's going to say that because of the amount of money that you had made on the trade with it going up that early, that fast. So by it going up too early, that's a good problem to have. With that in mind, remember to manage risk. Your risk on this trade is that short put. Should Exxon go down, you need to have a risk management plan in place to roll the put down, to get out of it at a certain point. Any of the literally hundreds of risk management techniques with which I know we've talked about on this show through the nearly 400 episodes with which we have had. So have that plan in place before you get into it. And by doing this, you have the ability to have a lot of freedom and a lot of flexibility with this trade. If I was an oil bull, I would be jumping on something like this yesterday, actually. Or earlier in the day today, I guess I should say. So if you are an oil bull, consider the diagonal risk reversal on an oil stock or on oil itself. I think it might benefit you if you are a bull, and you're right. And that is when to grow on for today, the first day of December.
There you go, sir. Well done expanding upon that theme I mentioned earlier of not seeing all that juice to the upside there in oil. If you do agree with that outlook, could be a lot of good ways to take advantage of that. What you're saying is, of course, one of them. Are you diving deep into oil these days, Uncle Mike?
No, I'm not. I'm just sticking with the indices.
All right. Thank you for that, Uncle Mike. Good stuff as always. And now it's time for us to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
A lot of stuff to keep an eye on this week in the old marketplace. I'm assuming all of us here, given our comments, are going to be keeping a keen eye on what's cooking out there in crude land, see if we're going to continue the upward movement we saw towards the latter half of today's session, if we're going to drift or perhaps rocket back to the downside, perhaps down to that 65 handle or somewhere in that range again. The future remains uncertain, so we'll all be watching that quite intently. Of course, Uncle Mike will be glued to his Apple to see if they will perhaps continue this downside dance, or if this is just perhaps a near-term blip, taking off some of that upside profit that everyone who's been holding Apple for any length of time certainly is sitting on. So perhaps we'll start with you, Uncle Mike. Even though you just finished talking, I'll wind you up one more time. What are you watching for the rest of this week, sir?
Definitely watching Apple, as you put it. There's also something we didn't even talk about on the show today, is that shiny metal gold. Gold made a nice little comeback today, as well as silver. So watching those to see if this can definitely continue. Excited about we had nearly a 4% move today in GLD. So watching that to see if there's some continuation, and just kind of seeing, in my SPY portfolios today for my clients, I sold some puts on SPY. So I think this is a buying opportunity personally, and the overall market in general. And the main thing that I'm watching from an event standpoint is this Friday's unemployment.
And it's a pretty rocking day when we don't even touch on a 4% up move in gold, and indeed your favorite product there, GLD. So certainly a lot catching our attention today. We'll move on to the macro side with the Viceroy. Mr. Alex, what's catching your eye for the rest of this week, sir?
The 10-year, the core of macro. If you look at us, the Germans, the Italians, the Spanish, the Brits, and the Japanese, we're the only 10-year trading at over a 2 yield. The Italians are paying 199. Spanish are paying 183. We are the highest yield of most of the developed countries. The Germans on the 10-year are paying 0.7. I'm not sure if that means we're going to see a recession in Europe or our rates are going to go lower. But cheap oil seems to have really helped. So looking at the 10-year, looking at the VIX, I think VIX got a little bit ahead of itself. And as Andrew has pointed out, VIX seems to be lately more of a lagging indicator than leading indicator. Boy, I would be shocked if we take out the 2 handle on the 10-year in the last 30 days of the year here, but keeping a close eye on that.
Never failing, sir, with the macro. We love it. We love it indeed. All right. And rounding out the panel here, Mr. Rock Lobster, what's catching your eye? I'm sure you're razor focused on oil. Anything else catching your eye out there these days, sir?
Right. Just to the extent that oil just sort of gets everybody all jangled up on what's going on.
Yeah.
You know?
People want to chat about oil, hence the pit chat, rocking and rolling. So there you go. It's a good thing, sir.
Yeah, totally. So that's where just, how, and really where the volatility is coming now. We did have a sell-off in all kind of what we'll just call the loved stocks today. Downgrading Amazon debt. It's always like Moody's always feels late to the party. Don't ever see these guys are always like, now they're downgrading Japan. Like, really? How long are you going to wait? They always seem like late to the party, these ratings agencies, and I think that kind of reverberated a little bit, and what's going on with the emerging markets have sold off a little bit again to the extent that lower oil prices aren't good for, let's say, Brazil and Russia and stuff like that. But on other countries, it might be better that are net importers. So I think this oil drop has got everybody a little skitchy. Volatility was pretty low. VIX was low. And like I said, I saw a pretty decent bid for futures today. I'm very curious to see if that bid remains tomorrow, and that's kind of what I'm looking at.
Speaking of ratings agencies, perhaps missing the boat, I'm looking here while you're talking at some of the Deutsche Bank corporate research that they have, and their end-of-year forecast for WTI, 95. So either they're not
get along quick.
Yeah, I know. And their year-end forecast for Brent 102. Given the fact that one closed at 66 just the other day, one closed at 70. Either they need to revise their forecasts pretty aggressively, or that double diagonal is going to be, or that double risk reversal is going to diagonal risk reversal is going to be just knocking it out of the park, Uncle Mike. Either way, crazy talk. I'm guessing they haven't had a chance to revise their estimates. They kind of got caught unawares by all of this aggressive near-term downside move. We'll see if they revise that in the near term, but interesting stuff nonetheless. Shows how much stock I put in these types of forecasts. And unfortunately, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. Before we go, as always, let's check in with each of our cohorts here, see what they're cooking up that may interest you. Mr. Rock Lobster, if folks want to join you guys for some webinars or perhaps for some pit chatting, where should they go? What should they do?
Next week, we start our boot camp. Go to www.optionpit.com/events. And boot camp, you'll get a lot of option learning. Basically, we'll just call it a slight in-depth look, about 8 hours, of all of the topics that we talk about on this show. Basically, the wheels, selling puts, understanding how vol works, understanding how the Greeks work. Just giving you an idea about, like I said, like the tools that Options Express, why did they build those things? There must have been a reason that they built those things. So, you want to learn how to use the tools that are available, but you have to learn the basics first. And boot camp is for the basics. So that, and I'm also doing a webinar that I have to tweet out tomorrow. I think it's Andrew at Option. I'm at Option Vol is my Twitter handle. So take a look for that, and you'll get my tweet with a webinar I am doing tomorrow on the wheel trade, actually.
There you go. Don't plug the other Twitters that often, but follow Andrew over there at Option Vol, and there, of course, at Option Pit as well on Twitter. Uncle Mike, I don't believe you have a Twitter handle. If you do have, you don't really use it that often, but if you do have one you want to plug, feel free, and otherwise let us know what's cooking in the land of RCM these days.
December 10th, we have the big futures event in Florida and Miami. So if you still haven't signed up for that yet, go to rcmfutures.com and don't do tweets. It doesn't fit with what I'm doing. And I think I actually do have a Twitter account, but just haven't found a way to really make things tweet for myself. So I guess, I don't know, the birds aren't tweeting.
I do recall receiving something from you on Twitter, I believe, once. And that might have been when you set up the account that first day.
I think that's what it was.
So you can find Uncle Mike on Twitter and indeed follow him. I wouldn't expect a robust dialogue via Twitter, but he does have it, so you can check him out there. Of course, we are at Options on Twitter. We plug that all the time around the show, so you guys know that. All right, and Mr. Viceroy, take us home. What is coming down the pike over there in the land of Options Express?
So the last live event of the year, December 13th in Boca. Mike mentioned the RCM event in Miami on the 10th. Spend a couple extra days in Florida, drive up the coast to Boca. You get to meet with Jim Ruzan and his crew. Couple events coming up this week. Wednesday the 3rd, Mike Zaremski, who runs our futures desk, is going to do an introduction to futures. And if you're thinking about learning more about futures options, this is the opportunity to spend some time with Mike, who's a seasoned pro. Also on the 3rd, covered calls and IRAs. Nina's going to be doing a webinar on that. December 4th, Dan Gramza from the CME is going to do his year-end futures roundup and his look ahead at 2015. And a new topic in the webinar library here at Options Express, we're going to have Spencer Logan, who's one of the folks from what's called SCR, Schwab Equity Research. And he's going to talk about evaluating stocks using a quantitative approach. That's what SCR is about. They rate just about every major listed company, and it's an interesting view at how to select stocks. One area I find particularly interesting with SCR or Schwab Equity Research is if you're somebody orientated towards income, looking at writing covered calls and selling puts on their B and C rated stocks. Not so much their A rated stocks, which tend to do real well in good markets, but the B and C rated stocks. So Thursday the 4th, spend a webinar with Spencer Logan from Schwab Equity Research.
All right, and on behalf of the Viceroy and Uncle Mike and the Rock Lobster, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. We'll get to them on Thursday, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.